Hi everyone, welcome to Crypto Clarified, investing in the truth. In this podcast series, we'll be digging into the truth behind today's cryptocurrency headlines. My name's Jason Guthrie, head of digital assets at Wisdom Tree, and I'm joined by my co-host Camila Russo, founder and editor of The Defiant.
Welcome to Crypto Clarified. This is the first episode in a new series that we're doing, taking a look at the big stories from the last month and sort of trying to dig into what's behind them. It's a very conversational series, but we're looking to really get to the kind of nuts and bolts and what's driving the big stories. I'm Jason Guthrie. I'm head of digital assets for Wisdom Tree here in Europe, and I'm joined by my co-host Camila Russo. Hi, Camila.
Hey, Jason. It's so great to be here. For those who don't know me, I'm the founder of The Defiant, a content platform focusing on decentralized finance, and the author of The Infinite Machine, a book on the history of Ethereum.
Perfect. So, look, today's episode, we're going to run through some of the big headlines from the month, get into kind of what's driving them, and then take a few kind of questions or Q&A from the people that we've got watching live. I think kind of to kick us off, it's hard not to talk about the Bitcoin price this month, given that we hit all-time highs. It's a little bit of an inauspicious start to our series, given that we had a 5-10% sell-off today, but it's still been a very good run for the market in the last sort of month or so.
Yeah, I mean, it's been huge this whole year for Bitcoin. It's up multiple times, so I think we can say it's still we're still in the midst of a bull market right now.
Yeah, it definitely feels like we are. I mean, I found it a little different this time around, though, hitting sort of those new all-time highs. In previous times when we've done it, it's come with a lot more fanfare, a lot more excitement, got a lot more news headlines. This time it was sort of very muted. I don't know if you've got thoughts on kind of why that was.
Yeah, I agree. I think what we'll see in future bull markets for crypto is that Bitcoin will take less and less of the attention of headlines, and just like the overall thought highlights of the space. I think the fact is that the overall market share of Bitcoin relative to the rest of the cryptocurrency market is bound to continue to fall, just because there's so much development outside of Bitcoin. So I think it's natural that this time around there was so much attention and hype elsewhere. So, I think most of the headlines, or at least like a big chunk of the headlines, have been focused on NFTs, on DeFi, on the other layer one chains, like so much going on with Solana, with Cardano going live. And so all those developments have taken the spotlight off of Bitcoin, even though it's obviously, continues to be the biggest crypto, the first one, the kind of first gateway of most people into crypto. So it's still hugely important, but like when everything goes up, because Bitcoin is kind of the safest option, I think other cryptocurrencies will go up faster, and so just like capture more attention than Bitcoin.
Yeah, I agree. It wasn't so much. I know Bitcoin hits all-time highs, but I think the big story was that the crypto market cap, the size that got to, and that was carried on, as you say, all of the things that you've just mentioned. I think layer ones, this sort of growth of the alternative layer one narrative, I think was really, really interesting. If it's Solana, Cardano, Avalanche, Phantom, Luna, all getting kind of a lot of attention and somewhat in kind of equal measure. And I think there was somewhat of a mentality shift, at least in the people that I'm talking to, around that moving away from kind of a winner takes all thought process. Like, look, this is a technology, a new one will come along, one of them's going to win. It's VHS versus Betamax. But the reality now seems to be people are thinking about interoperability and multi-chain futures, and different chains will be good for different things. All right, Ethereum might be expensive, but it means high value transactions can still go on there if it carries a lot of trust and is well established, and other use cases that need more throughput or need lower transaction costs, well, people are building chains for that and having them all work together in a more harmonious ecosystem. I found it very encouraging that as a narrative seems to be permeating, which I think opens the door for kind of wider investment, wider usage, people looking to hold a more diversified kind of subset.
100%. I think, if we look at just how the internet is made up of, it's not a single protocol. And even though it's not something that we really see, but the internet itself is made up of different protocols. There's a messaging protocol, there's like the communications protocol between internet nodes, and there's different pieces that go into making just like the base layer of the Web 2. And so it just makes sense that will be the case with Web 3. I don't think there's one base layer that needs to provide all of the different use cases out there. It doesn't make sense, because it wouldn't be optimized for every single thing. So I think that's what we're starting to see now.
It feels like we're moving toward it, but we're probably missing like a usability layer to really get to mass market. But I guess that's what comes next, right?
Yeah, I agree. I think, right now we're starting to see what the different use cases might be. It's like, Bitcoin is digital gold, and it's kind of this safe haven protocol that is very hardened and maybe doesn't need to carry very fast transactions. Then Ethereum might be the settlement layer for very big transactions, though that might change with layer 2. But I think it's likely that we'll see other layer 1s like Solana and Avalanche that will just be better suited for things like gaming, for example, that you don't need maybe as high a security as the Ethereum network can offer, and you just need like a very fast transaction time. And so we're seeing kind of all these use cases break out, and so with that, you see all of the bullishness and activity coming to other layer 1s. And you're right. I think there will be space for more diversified crypto portfolios that will need to kind of access all of this growing ecosystem.
Yeah, I agree with that. I mean, so speaking about use cases, NFTs has been just such a huge topic, right? It seems to be what's on the news every other day if you're on Bloomberg or CNBC. Have you got an opinion on where this is going? Is it a hype? Is it a bubble?
For me, NFTs are the ICOs of this cycle, and that's kind of has like this negative connotation, but I don't think it should. So I think ICOs have gotten like a really bad reputation for just like this huge hype in 2017, attracting billions and billions of dollars, and many of them not really delivering on all their promises, and most of the projects were really just fluff. But in the end, if you look at projects that are the most important in the ecosystem today, came out of that hype cycle. Like those were the projects that were able to raise capital in the previous bull market, develop and grow during the bear market, and now we're seeing kind of the fruits of that development. So I think something similar might happen with NFTs. We're seeing kind of this huge NFT bull market, tons of capital being poured into all these projects, and I think many of them will die off.
It's sort of the story of crypto, right? Like you mentioned the ICO thing, but it's this sort of capitalistic Darwinism, right? Like there's a lot of experimentation going on, and not everything's going to win, but you come out with some genuine use cases and the technology gets progressed. So
100%.
whether the
Yeah.
JPEGs need to be worth anything in 5 years' time is maybe less important than getting this as a use case. Like unique value on a blockchain is a big kind of innovation, right?
Yeah, I think there will be projects that will be uh, continue to like thrive in the next few years. Some will die off, but I think what we're seeing here is a genuine use case for blockchain technology and crypto. It's giving provable digital ownership,
Mm-hmm.
and that's something that we just couldn't have before. I mean, the fact of the matter is that today, thanks to NFTs, artists and creators can monetize their work. They can sell unique, like truly unique art pieces tied to tokens, music tracks, any kind of digital file that you can transfer online. You can make it unique, and you can prove it's where it came from. You can prove ownership, and that's huge, and that, I think right now it's like starting with kind of the creator artist space, but you can extrapolate it to any kind of digital ownership. Like real estate might be huge. Like
I'm really excited about the kind of extension of the technology. Like I didn't get into any of the current wave of buying digital art, but collectibles really isn't my thing. I don't buy watches, I don't buy art, right? But if I think about like unique pieces of value and ownership on a blockchain, and what the blockchain brings to ownership, transparency, high degree of control, high degree of transferability, they're kind of characteristics I'd love to see applied to kind of unique markets more generally. So like you mentioned real estate, that one's obvious. Buying a house is an awful process if you've ever had to deal with it. Like trying to if you could transfer the deed to your house in 45 seconds in an atomic swap against dollars or pounds or whatever it might be, the efficiency that comes to the market and the liquidity that brings is going to be massive. And there's all this other value that is out there that is unique to people as an individual. I think about people's healthcare. I think about their employment benefits. I think about their credit rating. And like these are things that are valuable to you and unique to you. So NFTs is a technology to represent that in a way that you could have better control or ownership of it, better provability. These, I think, are going to be really, really powerful characteristics that can get pushed through markets in a very general sense. And NFTs is an important bit of tech for that.
Yeah, 100%. And I mean, another use case that we're seeing right now beyond the collectibles is just the community aspect to it. And that kind of sort of comes with collectibles, but it's really just, buying a token that means that you now belong to this club, or this community of like-minded people. And that will give you kind of access to different things. Like a great example is what Gary Vaynerchuk has done. So he issued a bunch of NFTs, and the art itself wasn't the point. Like he just like made some like really ugly doodles and sold them as an NFT to his community. But now, and obviously, people love him and they ate it up, and everyone bought these NFTs, and now they're all part of this club, and these tokens now give them access to different things, like a community only accessed chat, time with Gary, consulting with their projects, and so on. And so I think this is another really, really cool use case. You can start to use NFTs as a way to unify a community of people who used to be just like out there, unknown to you in the internet and globally, and now you can just like gather them all and have them have this vehicle to reward them and to create different kind of access to experiences for them. So this is a kind of another aspect that for the first time you have this tool to incentivize communities and also for people to better monetize their communities, because I think there's like actual value in creating these groups of people that follow some kind of influencer. But you had value there. You have like thousands or like millions of followers on Instagram or Twitter, and maybe you can have like sponsorship deals, but it wasn't as direct as just like actually selling something to your community and have them also benefit from that. So I don't know. I think this is just like taking shape, but I think it will continue to kind of evolve and grow.
This sort of dovetails nicely into kind of metaverse, right? Which is again another huge thing with Facebook and Microsoft talking about it. But like, it's sort of what you're talking about is the collision of a few trends, a few things that we see happening in kind of the digital world, like these formations of sort of social networks of digital communities. I think that really got accelerated during the pandemic, where people were isolated, where their primary way of making contact was via these networks. I think the growth that we saw in things like Discord or Twitch, in terms of these communities building up, and it might be around like sort of influencers, as you mentioned, or a particular hobby or topic, but it really has grown quite a lot. And now when this is starting to collide with the crypto world, with the ability to transfer value, and then trying to unify these various communities under some sort of a banner, we now get into, as I say, Facebook, Microsoft making announcements that they want to get into this metaverse space. Into the NFT gaming space. I mean, we've seen massive traction in this sort of stuff, massive demand for the kind of native assets that exist in these. I think Decentralized token Meta was up 300% or something this month. It's gone insane. And I think over the last 12 months, it started about 12 months ago, but it's up 81 million% in a 12-month period, which is just an unfathomable number. So this seems like something that's getting traction too. I mean, do you think it's going to go the way of NFTs in terms of get a lot of hype and then go quiet again, or this is something that's got some legs?
I mean, I think NFTs also have legs, and so does the metaverse. And I think 100% there will be this like hype cycle where everything, everyone will want to get a piece of this and brand themselves with the metaverse, and then like maybe nothing will come out of it. But I mean, something will come out of it.
It's different here, right? Like, but I mean, if you've got Facebook and Microsoft putting money, resources, developers behind it, that's a bit different than the crypto native things coming about, right?
Well, I think not. I wouldn't like underestimate crypto native things,
sure.
but I'd say definitely like the metaverse is here to stay, because I mean, it's here. Like, it's not something that is being dreamed up by Facebook. Like, it's something that has been growing and happening for a few months now. It's like even years. Like Decentralized was created in, I think, 2017. It's been around for a while. You have Crypto Voxels, Somnium, like a bunch of like VR worlds. And in this kind of, in the extreme version, the metaverse is this very futuristic world where you need headgear to be immersed in it, and everything is digital, and you have an avatar, and you have these different kind of in-game items and so on. But in the more kind of minimalistic version of it, it's something that we're already experiencing, which is kind of what you mentioned, since it's been heightened by the pandemic, the fact that we spend all our time online. And if you are dealing with DAOs, with if you're being paid in crypto, if like all the communications that you have are with like on like anonymous people in a like Discord chat, and you're investing in like digital properties with NFTs, and you're organizing via smart contracts, that's already starting to feel like a very early version of the metaverse, and people are people are already kind of living and working this way. It's like a very small niche, but it's already happening. So from there to saying, okay, like the next step is maybe this will be a more immersive experience. Maybe instead of a Zoom call or a Discord call, you will be in this virtual reality, talking with different avatars, and you will own the clothes in your avatar as an NFT, and they'll be kind of in your own crypto wallet. And it's not like such a it's not so far from where we already are.
No, it's true. I mean, it's maybe a little brave new world for my tastes, but I think people obviously take it very seriously. It's a massively growing segment. I think there's also an interesting sort of feedback with the real world around how interconnected people are, and whether they're, does this exist in sort of two discrete places, or is it actually more tied to people's identity, and do they socialize in real life? There was a party, an NFT party in New York a few months ago that had 5,000 people attended, 3,000 on the waiting list. They'd never met before. They were just all involved in these digital worlds, and people are identifying by their sort of, by what their avatar is and things like that. So it's actually more of a circular piece of identity and evolution of these social networks, which is, I think, very interesting. I mean, again, I'm not looking forward to, well, I hope that the Facebook one isn't the prevailing one. I don't really want Zuckerberg controlling some dystopian VR kind of future.
No, me neither.
I don't think that's a particularly appealing place to be. But at the very least, if he wants to invest $10 billion in training developers that can then go and build interesting projects on their own, I don't think that's the end of the world either. So I think it'll be a really interesting one to see how it evolves.
Agree. And yeah, no, I'm not very bullish on the Facebook version of the metaverse. To me, it's like the antithesis of what the metaverse is supposed to be. Kind of, Facebook has been like the embodiment of like Web 2 gone wrong, just like this very closed place, closed garden. Like Facebook is using all our data, profiting from it. We don't people don't have control of what is on that platform. You can use your information and data while you're on Facebook, but you can't really leave from it. So it's just very different from the Web3 concept, where everything is open, where you own your assets, you own your information. And to me, that's what the metaverse should be like. Like users should be in control. You should own all the digital assets in this kind of new world.
I think that's a more interesting way to phrase this sort of metaverse concept, that there is this decentralized, open sourced digital ecosystem, for lack of a better word, that you can interact with as much or as little as you like. And that might be VR headsets and avatars and NFT clothing, or it might be as simply as you control your data, you know how much you want to interact. It's done with your kind of unique address that you control through cryptographic keys, and that's your interaction with it. It's not your data out there with guys like Facebook, right? I think that's a much more interesting way to kind of think about what it could be. It doesn't need to be this very hyper gameized VR kind of space.
Yeah, no, I think that's the core of it. I think that's what's exciting about it. It's and it just like it makes me think that metaverse and Web3 is just like one of the same thing. To me, like Web3 is exactly that. It's it's an internet where users have greater control over their assets and their information. And it's a reaction to an internet where we've given up that control to so many intermediaries. So Web3 kind of allows users to take that back. And then like the metaverse is a manifestation of that. It's like, okay, Web3 is an internet where users have taken back control, and the metaverse is kind of where you communicate and socialize and buy things and interact with other people.
Yeah, I think that's a really, really good way to kind of phrase it. Changing topics a little bit, but I mean, still sticking with this idea of Web3 and sort of owning your own data, open source. MetaMask and the airdrops that we saw for the ENS over the last month. We want to talk about that for a little bit?
Yeah. I think this is such an interesting topic, airdrops. ENS was interesting because, well, ENS is Ethereum Name Service. It's kind of the domain name protocol for Ethereum, and ENS has been around also for a long time. I think also since like 2017 or 2018, but for a couple of years at least, and that's given basically anyone that's been involved with Ethereum the chance of owning their own domain name. For example, I own camirusso.eth. I also own the Defiant.eth, and it's most people who have been interacting with Ethereum own their ENS address. So what happened with the airdrop is that everyone who had been using ENS got a chance to claim tokens in the protocol, and like the I think the average amount of ENS that was claimed, I believe, was like around $5,000. So it wasn't kind of nothing, and and it's just like the latest of like airdrops by big Ethereum projects. Uniswap was a huge one. Like everyone who interacts with DeFi has touched Uniswap at least once. And what they did last year was that they airdropped uni tokens to anyone who had interacted with the decentralized exchange at least once. So everyone got kind of the same amount of tokens. I think it was 400 uni, which was worth about like $1,000 at the time. And Gitcoin did the same thing. Well, Paraswap was the most recent one. I don't know how many. Pulled Together was another big airdrop. There's been dozens of airdrops. And what these things do is that it's become kind of expected that people who are using a Web3 protocol will at some point be able to claim tokens of that protocol. And I think why that's cool, it's because what's happening is that users of Web3 are also becoming owners of the applications and protocols that they use on Web3. So I always give this.
It's good for bootstrapping sort of interest for user base, right? But I mean, in essence, the protocols are subsidizing. Well, it's a marketing thing, right? It's subsidizing pulling people there. That's not going to be a sustainable feature of it over the 5-10 year time horizon, right?
I think it's bootstrapping, but really what it's doing, it's kind of decentralizing ownership. And with these tokens, what users have the ability to do is participate in governance. So it's as if I, as an early Facebook user, had received Facebook stock when they did their IPO. It's as if everyone who had created a Facebook profile early on had been rewarded with Facebook stock, and you as a user and now Facebook stock owner have the ability, like, own a piece of the protocol that you've been using and participating in and helping grow. So you're now compensated for that. And you also, by owning a piece of it, you can also participate in governance. And in the case, for example, of ENS, and Gitcoin did the same thing, participation is very low on these governance processes, because who has the time to just like stay on top of everything that's going on all these token votes. So what Web3 protocols are doing is creating these delegates. So when I received my ENS airdrop, I was able to delegate my voting power to people who had kind of applied to be delegates who participate in governance. So you have these kind of like protocol politicians emerging from this. It's like people whose job it is to be up to date with governance and kind of represent all token holders. So it's Yeah.
Like the governance point's really interesting. I'm looking forward to seeing how that evolves. I think it get like a lot of these things that we see developing organically in the crypto ecosystem are mirroring complaints people have got in the existing one, right? In the
Mhm.
traditional space. I mean, corporate governance has been a concern for, the topic's been going around for a decade now, and no one seems to have a particularly good solution for it. Everyone's still complaining about it. There's
Mhm.
always issues and concerns. It's one of the hardest to solve in the ESG conversation, in talks we have with our clients. And so this kind of system where it's this decentralized governance where shareholders have more direct voting power and how that might dovetail with actual legal enforceability on what these organizations look like in the future. Again, it's a really interesting experiment for what could potentially be a better way to do things and solve one of these problems.
Totally. I mean, I don't believe that Web3 in its kind of first iteration of governance will be able to solve this, but I think it at least allows a more flexible way to iterate and to experiment and to improve this, as things progress. But for now, I'm just really, I just think it's really cool to see how Web3 is evolving into this place where users are owners, and it kind of goes back to our what we were saying before. This is kind of the core of what we're seeing in this new kind of phase for crypto and dApps.
Yeah. Okay. We are, and we're about halfway into this, so we're about 2/3 of the way into this. We should talk a bit about traditional markets and adoption. Bitcoin futures ETF that the SEC approved. I've got a few relatively strong thoughts on this, but I'd be interested in how you kind of see this for the space.
So Bitcoin ETF, it was something that was expected for such a long time, right? I think the first application was filed back in 2013 by the Winklevoss. So it's taken all these years for the SEC to finally approve a Bitcoin ETF that's supposed to give investors in the U.S. More direct exposure to Bitcoin. So I think it's good news for the space, of course. It's a big milestone, but I think so much has happened since 2013 that to me it just like wasn't as big a deal anymore. Like especially because it wasn't a spot-based ETF, so it's not like buyers of the ETF are actually holding Bitcoin itself, and it does create kind of that distortion with the actual Bitcoin spot price. And at the same time, I'm just like my space is DeFi. Like at the Defined, we're covering that every day, and seeing how much progress has been made in the DeFi space in terms of ETF like instruments and funds. Where we did a story when the ETF launched, and we made an attempt to count all the tokenized index funds in DeFi, and it was hundreds. There's I don't know, like there's a few projects that have made decentralized platforms where anyone can go and create their own basket of tokens and tokenize that and kind of invest in that basket as if it was an ETF. So we've already seen that blow up in DeFi. And sure, like the whole point of this Bitcoin ETF is that it gives access to institutions and to just like retail investors who don't know how to use MetaMask and so on. So I get that how that's different, but at the same time, if you wanted to, you can create an Ethereum account and go and buy these things directly and just have a much more sophisticated way to invest in crypto than the SEC is allowing. And it's like it's taking so long to approve this very imperfect instrument that's like a futures based, just like Bitcoin ETF, and the fact that it's only Bitcoin, where there's like so much going on, so, so much more going on in crypto. That's like, okay, I don't
Yeah,
know.
look, the regulator's never meant to be the fastest moving entity in the room, right? They're backward looking almost by definition. But I do worry about the pace differential between what we see happening in the crypto space and the DeFi space and the blockchain tokenization. Because I agree that that stuff's the future. Like tokenization as a vehicle, blockchain native financial services of the future. I spend a lot of my time working on projects for exactly those topics. And I kind of look to the regulators as being an important part of this process. We want to build trust in the system. You know, that means people that are developing in the space, we need to build our businesses in a way that are consistent with, you know, consumer protection, transparency, disclosure, accountability. These things really matter in financial markets, in financial services. And I think a lot of people want to do this stuff to the best kind of standards, but we do need kind of clarity from regulators. We do need guidance in terms of what we're doing. And I think in order to do that effectively for this type of technology, they're going to need to move quickly and develop the right frameworks. The Bitcoin futures ETF, I think you rightly say, is probably not the optimal way to go about it. I think futures back versus spot. Spot's been proven in Europe, in Canada. Futures comes with, you know, the cost of contango. It comes with position limits that the Invesco product's already batting up against. So the idea that you wouldn't go straight to spot when it's already been proven and we know it's more efficient and it's a tested way of doing things sort of highlights kind of how behind the curve I think some regulators are in looking at this sort of stuff. Now, I think they'll get there. It's a matter of if not when. Regulators are an important partner as part of this process, but the space is moving really quick. And I think the writing's on the wall that the future's there. And I think there's a big win to be had for a given jurisdiction that can solve for this. If you can work out how to build the framework so that this industry, this innovation happens in your jurisdiction, that's going to be huge for, you know, whichever market comes up with it first, comes up with a way to encourage the innovation to build the trust and bring the mainstream in. So I think it's really important. So, you know, the point you make about how quick are they moving? Are they, you know, at the front of this? Do they understand it properly? It's a really valid one to be making.
So, I mean, why do you think they chose futures over spot? Like, what's the reasoning behind that?
I think it abstracts the decision points for them, right? In that they are referencing the CME future. The CME is a regulated market. They can be comfortable with a product on a regulated market. I think that that's obviously, you know, there's an obvious gap in that piece of analysis where the futures price is linked to the spot price, and the reference rate that drives the settlement price, like the CME has a reference rate that drives the settlement price for the futures contracts, and that is taken from crypto spot, right? It's an amalgamation of, I think, 6 exchanges. So they're intrinsically linked anyway. The available liquidity that anyone can provide for a futures contract is driven by the liquidity that they see in the underlying spot market. So these things are just linked together anyway. So I don't really fully understand it. It doesn't make direct logical sense to me, but I just think it was an easy thing. If they're not comfortable with regulating crypto markets directly, they're worried about price discovery, they're worried about manipulation, and that's fair enough. But I think they're to the point where they need to go deeper than this, and they could have gone deeper than this. So it's a shame they didn't.
And you mentioned like the different jurisdictions. To you, like you're creating products in different markets. Right now, where is the kind of the best place for institutions to get access to crypto?
So look, it's going to depend on the domicile that the client is, but you know, and how they want to go about getting it. Different jurisdictions are focused on different elements of the crypto ecosystem at sort of any given point in time, right? The US, like, they're not very advanced when it comes to investment products, but they actually have done a lot for custodians, right? New York as a regulator's done a great deal. We see a very similar thing in the UK. They're really doing nothing for investment products or access through those regulated vehicles, but they are looking at brokers and custodians. How do we regulate these guys? But if you look at, let's say, Germany or Switzerland, they're doing tons of work on the investment product side in terms of like allowing firms to structure products and provide market access for it. So they're all kind of looking at it in different places. I mean, crypto is complicated. It's deep. There's tons of stuff going on. And I think people will catch up eventually, but you just want to see people not having regressive policies. It's understandable you can't advance everything at the same pace everywhere, but you just don't want to see people going backwards.
Yeah. I mean, I think the U.S. will definitely regret it if they don't make just like a friendly environment for crypto. Like, why wouldn't you want to have all this innovation happening here? Like, you definitely don't want to drive like all those developers to Europe or Asia, So I mean, hopefully, I think I'm optimistic that they'll realize this. And I think like an interesting thing that's happened this year actually is how crypto has become a political issue. With the infrastructure bill, I was really surprised to see how quickly people in the crypto community just mobilized to to call their lawmakers and create these lobbying groups and just funnel kind of capital towards this. Like there was this whole Uniswap vote to Uniswap was like billions of dollars in their treasury. So there was this vote to use some of that for lobbying, and there were like all these like lobbying DAOs that formed.
Yep.
So I don't know. I think we like for the first time, crypto is emerging as a political force. Like it is like a voting, like a a campaign issue right now. So I think maybe that has the opportunity to move the needle somehow.
Yeah, I think, look, we know that there are lots of people in crypto, right? And then those people are going to have opinions and they're going to want those opinions expressed through their government. The interesting thing about this is like the point of like any technology like this, whether it's the internet or it's any form of money, whatever it might be, and why we want to evolve to the next one is that it helps us organize ourselves better to work toward collective endeavor. What's really interesting about that is the guys with the best technology for organizing themselves, for voting, for deploying capital against a given collective agenda are the people in crypto. They've got the next evolution of technology for it. So the idea that they are now organized, they're on the Discord servers, they're pooling capital, they've got DAOs to vote on it. The idea that they're able to go and get involved, that's not surprising to me at all. Like they're the best armed guys in the room now.
That's a really interesting take. I was surprised because crypto was always like anti-establishment, anti-government, but now it's like, okay, like people are realizing we're a force, it's like let's kind of get involved and like make things work in our favor, basically.
Yeah, I think there's definitely that anti-establishment sort of element to it, but I don't think that's everyone, right? The beauty of crypto, of DeFi, of blockchain is that this is a technology that will appeal to a lot of people for a lot of different reasons on a lot of different use cases. Same thing as the internet. Not everyone needs to use it for the same thing. It's the same thing with the US dollar. You don't all have to buy from the same. It's not about everyone buying Starbucks. You can all do a lot of different things. But there's definitely that libertarian edge, but the commonality that people want this technology ubiquitously available is what unites them. That's what they'll organize around. So, coming together, regardless of if you come from it from a very libertarian, zero tax, live on a ranch in Texas sort of vibe, all the way up to, hey, I want tokens in my banking system because it'll lower my costs. That's a big spectrum of people, but they want this technology there available, treated properly in the regulation. And so that's a commonality that will unite them, and I think they can get organized behind. And it's a lot of people.
Yeah, it is, of course.
Absolutely. I mean, look, we talked about the infrastructure bills and pieces, but I do think that like there is more embrace of financial service, of blockchain, crypto, DeFi generally by financial services, right? Like this is becoming more embedded in the mainstream. It's not a fringe group. We talk about the political action of individuals or the anti-government pieces, but it's entering the mainstream as well, I think, in a big way. It's becoming more and more apparent. I think, I don't know, interestingly, we went through, the pullback in March, April, and it was a huge pullback, 60, 70%. And no one called crypto dead. When I saw the same thing happen in 2017, every commentator, every bank, every research analyst was out saying, the bubble's popped. This is proof that it's tulips. It's going to zero. No one does that anymore. There's this general acceptance that the asset class is here to stay. And even if I think this is a viewpoint that's really kind of permeating its way through society generally, and definitely through financial services, whether or not people are ready to invest, ready to hold it, ready to interact with the DeFi systems, they sort of understand that the technology's here. And so I think that's a big kind of shift up in terms of how established and stable it can be.
No, 100%. And I think, this time around, the infrastructure is there to make that happen. Like you mentioned, custody is now allowed in US and European banks, and that wasn't the case in the previous bull run. Now, like all the big banks are offering some sort of Bitcoin product to their clients. So I think it's already part of mainstream. Like I think crypto is already mainstream. Like everyone has heard of Bitcoin. Millions of people have a Bitcoin wallet. Millions of people have an Ethereum wallet. And I think what's next is kind of for people to realize that crypto is not just for speculating. I think that will be kind of the next breakthrough, because I think that's how crypto is viewed right now. But what's being developed in NFTs and in DeFi and like the Metaverse is all these other use cases based on smart contracts that are just allowing financial services, like not just like buying and selling crypto, but lending, borrowing, trading. And I don't think a lot of people realize that yet, but I think kind of using these intermediated financial services is what's going to blow people's minds.
Yeah, no, definitely. Look, I think for everyone that's in financial services, the sort of writing's on the wall here. You've either got to get involved in this in some way, or you're going to become obsolete. Your clients will go somewhere else. Your business model will become outdated. So it's going to be interesting to see how that evolves over the next few years, 5-10 years.
Yeah, I think it will have to become integrated. Like I just see blockchain as becoming the new settlement layer for finance. So whether it be just like a traditional or like fintech front end and like blockchain in kind of the back, or just like people just going directly to decentralized platforms to integrate with this. But I think it's blockchain has proven to just be a more efficient way, more efficient rails for finance.
Yeah, no, definitely. I'm getting prodded by the guys running this that we've run over already. So I think we're going to have to wrap it up there today. Really interesting conversation, Camila. Thanks for joining me.
Yeah, it was great.
I hope everyone listening has found it useful. We'll be back next month, so please sort of sign up for that one. I think that our producer's thrown up the disclaimer side on here. I just need to sort of add that to clarify, the views and opinions expressed on the podcast are those of WisdomTree and the Defiant Media. They're subject to change. Anything we present in the podcast, it's not intended to be relied upon as a forecast, research, or investment or tax advice. This isn't a recommendation, solicitation to buy or sell any securities, and reliance upon it is at the sole discretion of the listener. Always remember that past performance is no indicator of future returns. So with that, guys, I think we'll say goodbye. Thanks very much for joining. Sign-ups for next month are already there, so please join us again, and we hope to speak to you soon. Thank you very much.
Yeah, thank you.
Thanks. Bye.
See you next month. Bye.
If you'd like to learn more about cryptocurrency trends, WisdomTree hosts a wide variety of research and educational resources. Visit our website at wisdomtree.eu/crypto to stay current on the latest crypto developments.